Welcome to today's Explainer. Look, if you've been following the tech space lately, you've probably seen the headlines about Micron technology. But today, we're diving into a story that is quietly, but entirely, upending the semiconductor industry. We are not just looking at a temporary financial win here. We are talking about a fundamental, ground-up shift away from those notoriously unpredictable boom and bust cycles that have basically defined the memory industry for decades. Welcome to the AI memory revolution.
Here's a quick look at our roadmap. First, we'll cover the AI memory boom. 2. Breaking the memory cycle. 3. Investing in U.S. manufacturing. And finally, number 4, the road ahead.
All right, let's jump right into Section 1, the AI memory boom and unprecedented financial growth.
Okay, prepare yourselves, because the numbers from Micron's fiscal third-quarter report, which dropped on June 24, 2026, are, well, they're just extraordinary. $41.46 billion. That is the revenue for just one single quarter. You know, when we talk about the AI boom, it's so easy to get lost in the hype. But this number? This proves the hype is translating into monumental, real-world cash flow.
But what's really wild is how that top-line revenue flows straight to the bottom line. GAAP net income surged a massive 15-fold to $28.24 billion. And for the Wall Street watchers out there, non-GAAP earnings per share hit $25.11. To put that in perspective, they absolutely crushed analyst expectations, which were sitting way down at $20.78.
And if you're wondering how efficiently they're turning those sales into actual profit, get this, the gross margin is sitting at a stunning 84.9%. Just a quarter prior, that was 74.9%, and a year earlier, a mere 39%. When you pair that with an 81% operating margin, you realize this level of profitability in hardware manufacturing is it's practically unheard of.
Zooming out a bit to look at the longer timeline, we are looking at a 346% year-over-year revenue explosion, jumping from $9.3 billion to over $41 billion in a single year, shows you just how violently the demand for AI memory has accelerated. The AI era isn't just approaching anymore, it is fully, completely arrived.
And the crazy thing? It's not just one lucky sector carrying all the weight here. Every single business unit contributed to generating $25.39 billion in operating cash flow. Sure, cloud memory is leading the pack, but look at automotive and embedded. That segment alone more than quadrupled. This across-the-board performance has literally left the company sitting on a $30.2 billion mountain of cash.
Let's move to Section 2, breaking the memory cycle and the strategy behind the numbers.
So raw financial results are great, right? But the truly fascinating story is the strategic mechanism actually driving them. Traditionally, the whole semiconductor industry has been this massive roller coaster, totally defined by unpredictable boom and bust pricing cycles. When supply flooded the market, margins would just collapse. But Micron has introduced a brand new model to replace all that chaos with predictability. It's specifically designed to guarantee their margins and prevent those devastating market busts.
They're pulling this off through something they call Strategic Customer Agreements, or SCAs. These are multi-year take-or-pay contracts. What that means is they involve binding financial commitments from customers to purchase specific volumes of memory. And we're not talking about a handful of small pilot programs here. By the end of Q3, Micron had successfully signed 16 of these multi-year, legally binding agreements.
Now, the absolutely crucial point here is the sheer financial weight of these contracts. Let this number sink in for a second. $100 billion. Just 14 of those SCAs lock in approximately $100 billion in lifetime minimum contracted revenues. And these aren't just empty promises on paper. They are backed by an expected $22 billion in actual cash deposits and commitments. Customers are literally putting their money where their mouth is to guarantee they get their supply.
Breaking that down by product, these contracts, which run from 2026 to 2030, already cover 20% of Micron's DRAM volume and 33% of its NAND volume. And management? They expect these SCAs to eventually cover half or more of all company revenues. Because these contracts include price floors, it guarantees that even in a worst-case doom and gloom scenario, Micron's lowest margins will still be higher than any of their past peak cycles. It is a complete structural transformation for the business.
And hey, this isn't isolated to just data centers running those huge language models. A perfect real-world example is their July 6th agreement with Ford Motor Company.
This partnership secures memory for next-generation vehicles, proving that these contracts give Micron unprecedented revenue visibility across multiple, massive global industries.
All right, Section 3, investing in U.S. manufacturing and building the physical foundation.
Because think about it, securing $100 billion in guaranteed demand means you need a massive physical footprint to actually supply the chips, right? Well, Micron's physical expansion is immense. They've upped their commitment to a historic $250 billion through 2035. We're talking new fabrication plants, or fabs, in Idaho, New York, and Virginia. The New York site in Clay is actually being called the largest semiconductor manufacturing site in U.S. history. They were so eager to get going, they poured the first concrete a full quarter ahead of schedule. As of right now, Micron is the only company investing in front-end memory fabs right here on U.S. soil.
Let's look at how this builds into the broader supply chain. Beyond their own fabs, in July they announced a localized $3 billion U.S. supply chain investment. That includes a $500 million strategic financing injection and a 10-year supply agreement to expand GlobalWafers' 300mm raw silicon wafer facility down in Sherman, Texas. They are out there fortifying every single link in the chain.
And this localized manufacturing investment, it has a profound macroeconomic impact. U.S. Commerce Secretary Howard Lutnick praised this exact expansion, noting that Micron's pledge is making the United States stronger in a sector that is absolutely vital to both the economy and our technological leadership. So it's not just corporate growth anymore, this is national infrastructure.
Which brings us to our final section, number 4, the road ahead and the AI supply shortage.
So, what does all this domestic capacity and rigorous contract structure mean for the immediate future of the tech industry? Well, it means the scramble is on. At the KeyBank Technology Leadership Forum on August 10th, Chief Business Officer Sumit Sadana put it incredibly bluntly. He said customers are scrambling for memory, even at very high prices. AI has created a fundamentally different demand cycle, one that is rising much, much faster than the entire industry's ability to supply it.
To truly understand the severity of this bottleneck, consider this. Despite those sky-high prices, Micron can currently meet no more than half of its data center customer demand. Less than 50%. Imagine having a product so hot you can't even fill half your orders. And there's no clear line of sight to when or even if supply will ever catch up in the near future.
Tracing the timeline forward, you can really see how this tightness translates directly to growth. We already know Q3 hit $41.46 billion, but for Q4, they are guiding for $50 billion in revenue and an unbelievable 86% gross margin. And looking even further out, the CFO has warned that the market in 2027 is expected to be even tighter than 2026. The squeeze is only escalating from here.
Naturally, Wall Street has reacted aggressively to all of this. After a 700% annual stock surge, the consensus remains a firm pound-the-table buy. With the stock trading around $911 in August 2026, the consensus average target is over $1,500. KeyBank is projecting $1,750, and Cantor Fitzgerald has set a bull target of $2,000. Think about that. Many analysts genuinely predict this stock could still double before this cycle is over.
To sum it all up, CEO Sanjay Mehrotra stated that these results reflect the strategic value of memory in the AI era. Micron has successfully evolved. They are no longer just some cyclical memory maker riding the ups and downs of the market. They have totally transformed into an indispensable, highly predictable pillar of global AI infrastructure.
Which leaves us with one final, profound thought to close out today's explainer. When a company manages to lock in guaranteed multi-year contracts that shatter the historic memory cycle, all while AI demand is vastly outstripping their massive domestic supply, who else out there can effectively challenge Micron's new dominance? It's a barrier to entry we just haven't seen in a very, very long time. Thank you so much for joining me as we unpack this incredible shift. And as always, keep asking the big questions.